Welcome to your daily crypto market update. I'm here to break down what's happening in the markets today, covering Bitcoin, Ethereum, XRP, and some important news from Binance. We'll also touch on regulatory developments and safety concerns that every crypto investor should know about. Let's dive straight into the numbers and trends shaping the market right now. Starting with the big picture, we are seeing significant volatility across major cryptocurrencies today, and there's a specific reason behind this movement. Bitcoin and Ethereum are experiencing heightened price swings due to a massive options expiry event. We're talking about over $2.2 billion worth of Bitcoin and Ethereum options that expired recently. Bitcoin dominated this expiry, with $1.87 billion in notional value, while Ethereum accounted for nearly $400 million. This kind of large-scale options expiry typically creates volatility as traders adjust their positions and market makers hedge their exposure. For short-term traders, this is a crucial time to exercise extra caution. When such large amounts of derivatives expire, it can create unpredictable price movements in both directions. The market often sees increased volatility around these events as institutional players rebalance their portfolios. Risk management becomes absolutely essential during these periods. Consider reducing position sizes, setting tighter stop losses, and avoiding high leverage trades until the dust settles. The current Bitcoin price is hovering around the $88,000 to $90,000 range, which puts it near what traders call the max pain level, where option writers face the most losses. Moving to XRP, we're seeing some interesting technical developments that deserve attention. XRP is currently trading near a key resistance level around $2.10 to $2.15. This level has been acting as a significant barrier, and market analysts are watching closely for a potential breakout. If XRP manages to break above this resistance zone with strong volume, it could trigger a rally toward the $2.60 to $2.70 range, representing roughly a 25% upside move. The token has been forming what technical analysts call a falling wedge pattern, which typically signals a bullish reversal when broken to the upside. However, it's important not to get caught up in the excitement without proper confirmation. Chasing pumps without waiting for clear market structure confirmation can be dangerous. Look for sustained breaks above resistance levels, preferably with increasing volume, and follow through in subsequent trading sessions. XRP has shown strength recently, even flipping BNB to become the fourth largest cryptocurrency by market cap. But remember that crypto markets can reverse quickly. Wait for clear signals before making significant position changes. Now let's talk about some important news from Binance that could affect your trading. The exchange recently announced the delisting of several trading pairs effective from January 3rd. The affected pairs include AI/BNB, ETC/BNB, FLOW/BTC, LPT/BNB, VET/BNB, and several others involving Brazilian real pairs. While this might seem like routine maintenance, delistings can have real impacts on liquidity and price discovery for affected tokens. When trading pairs get delisted, it often leads to reduced liquidity for those specific combinations, which can cause wider bid-ask spreads and more volatile price movements. If you're holding any of these tokens, don't panic. The underlying assets remain available for trading on other pairs. However, you should check the official Binance announcement for the complete list and consider how this might affect your trading strategy. Reduced liquidity can make it harder to enter or exit positions at desired prices, especially for larger trades. On the regulatory front, there are some significant developments worth noting. The much-anticipated Crypto Market Structure Bill in the United States is facing delays, potentially pushing comprehensive legislation into 2027 or even 2029. The delay stems from disagreements between Democrats and Republicans over conflict of interest provisions, particularly regarding senior officials and their crypto holdings. This political gridlock is creating uncertainty in the regulatory landscape. Adding to the regulatory drama, Coinbase CEO Brian Armstrong has publicly disagreed with certain provisions in the proposed legislation, particularly around stablecoin regulations and banking industry influence. Armstrong expressed concerns that traditional banks are trying to use regulatory capture to eliminate competition from crypto firms. This disagreement has created ripples in the industry, with some supporting Armstrong's stance, while others worry that walking away from imperfect legislation could leave the industry in continued uncertainty. Unfortunately, we also need to address ongoing safety concerns in the crypto space. Recent reports have uncovered another cryptocurrency scam, with the FBI warning about Bitcoin ATM scams that cost Americans over $333 million in 2025 alone. These scams typically involve fraudsters convincing victims to deposit money into Bitcoin ATMs under false pretenses, often claiming to be from government agencies or tech support. This brings us to a crucial reminder about safety in crypto. Always use trusted, regulated exchanges for your trading activities. Avoid any schemes that promise guaranteed profits or require you to send crypto to unknown addresses. If someone contacts you claiming to be from a government agency or tech company and asks you to use a Bitcoin ATM, it's almost certainly a scam. Legitimate institutions don't operate this way. Remember, if it sounds too good to be true, it probably is. The current market sentiment remains mixed, with continued volatility expected in the near term. While we are seeing some positive momentum in certain areas like XRP's technical setup and overall market resilience, the large options expiry and regulatory uncertainty are creating headwinds. Patience is key in this environment. Don't feel pressured to make quick decisions based on short-term price movements. For those looking to stay informed about crypto markets, remember to subscribe for daily updates without the hype, just clear analysis of what's happening and why it matters. Like this content if you found it helpful, and share your thoughts in the comments about what you'd like to see covered in future updates. Before we wrap up, here's your essential disclaimer. This content is purely for educational purposes and should not be considered financial advice. Cryptocurrency investments carry significant risks, including the potential for total loss. Always conduct your own research, understand the risks involved, and never invest more than you can afford to lose. Consider consulting with qualified financial advisors before making investment decisions. The crypto market is highly volatile and unpredictable, so approach it with caution and proper risk management strategies. Stay safe out there, keep learning, and we'll see you tomorrow for another market update.